Yo, what's good, you guys? So we're back. Nice little break, a refresher that I had to take over the last couple months. But as you know, when we do come back, the channel is fire, right? So we're going to do, I'm actually starting a new series. Now, this series is going to be very important for those that want to make sure that they can weather the storm in any investing journey that they're taking. So I am starting the Chart Master series for the Vaults of Crypto, the VOC Chart Master series. This is episode number 1. Involved in the things that we'll be doing on these particular types of streams, it's going to be like 90% charting, understanding, really trying to use the tool set that we created here at the Vaults of Crypto, but just other indicators that are widely used across the board on to get better understanding on price movement. A lot of the times when I talk to people, the last thing that they could really ever, like when they're new to investing, the last thing that they ever are able to wrap their head fully around is the price movement of an asset through time. They know sometimes it's up, they know sometimes it's down. When it comes down to being able to place your bid, place your buy orders, having some type of reference, some methodology helps. Now, yes, there's the DCA, just like set it and forget it. Of course, that's a strategy because the reason why DCA works is because you do it continually through time. But for example, I was an athlete for a very long time. The simple way to explain this is, okay, cool. You can go and like do your basic workout, 5 days a week. So maybe you do your jog around the block, whatever the case is, and hit some push-ups. So do that 5 days a week, and you do that for years. Yes, you will get in shape. Yes, you will get some good results in time. So that's what the average DCA set and forget it strategy looks like. But also when you're trying to say, okay, look, I'm trying to really double it up. I'm really trying to make some things happen for myself. Okay, cool. Now your workouts can have a little bit more specificity to it, more strategy to it. You can focus on, all right, let me actually focus on my biceps and my triceps. Let me focus on the shoulders of the upper body for today. Tomorrow's going to be a lower body. I'm going to go a little bit harder on the run. Maybe instead of just around the block, let me actually do a mile. Let me time it. Like when you add more detail, more specificity, more training, more preparation is what's going to give you more solidified results. I can't always say that the results are going to be just faster, but 9 times out of 10, they're going to be more solidified. The work is going to be put in. You're going to be more confident about your process. And alongside the way, you're going to learn a whole lot more stuff because you're implementing so many other things outside of just running around the block and doing some push-ups. So this is what charting helps. Charting helps you flex the muscles of your brain when it comes to being an investor and saying, okay, what are opportunities? What do trends look like? What do top heavy markets look like? What do bottom basins and very oversold markets look like? Just what is the landscape? And you can excel at it if you practice. And so this series is going to be made for those that just want the work, those that want the practice into being able to improve their understanding of the way that the charts work, how to implement some of the tools that we've created here at the Vault of Crypto, and then also just how to get confident in your investing, really taking advantage of key opportunities, key moments, because it's like once you see something before and you see it again, there's that reference that you can go back and say, okay, cool, I understand what this looks like. And you can have a different way of viewing that current scenario based upon your experience that you've spent a lot of time to research on or you've actually experienced here in the market yourself. So with that being said, appreciate you guys for coming through. Yes, we have taken a break, but we are coming back with a large flame of just pure education, because the thing is, you got to get educated to get the results. I'm just going to be flat out honest. No one gets good results without having some type of formal education in the thing that they are pursuing. And so if your goal is to be a savvy, long-term investor that can really say, hey, I've created wealth for myself through time, you can't do it by just throwing it out there. Like, you really, really, really got to put your foot in the deep end. Just jump in and learn to swim. And I'm here. I'm your swim coach. I'm your whatever you want to call me. I'm your guy that's going to help you feel good in the deep end, because only in the deep end is where you're going to be able to see the opportunity that other people can't see. And here in crypto is an opportunity that just most don't see. So if you're here watching already, you've done half the work. The other half is now putting in the hours and time, watching these streams, going back and doing some of the work yourself and getting the job done. At the end of the day, it's just about getting the job done for your personal knowledge so you can take the implementation level to the next level, if that makes sense. So here, as y'all can see, we have Solana. I wanted to pull up this chart. It's been a while since we've actually had a deep dive into Solana. I want to go ahead and talk about the genesis, so the beginning, this whole cycle. What did that look like? Where did the capital come from? What happens in a bear market? What do large capitulations look like? How can we spot those? What consolidation ranges look like? What do bottom basins in the bear market look like? And what does liquidity pushes look like coming off of a bear market? So I just mentioned like 7 terms, whatever the case is, 5 terms, all in 30 seconds. Now, the question is, do you know what these things mean? So simple as this: a bull market, and this is just your 101. For episode 1, I'm going to take it back to some basics for us. So in a typical bull market, let's get the draw. You're going to see an asset rise in price, especially in crypto, at a very volatile rate, meaning that the pace in which it goes higher is not slow. It's very rapid. So for example, from a standpoint of looking at time, you're talking about from April of 2020 to just about November of 2021. So that's a year and a half, give or take, 588 days. You have an asset that went from, give or take, right? We're talking about something that came out at 68 cents and ended up going up towards $264 and some change, I believe. So this is an incredible volatile increase in price that most assets don't do. Here in crypto, this is something that happens in a first cycle for a coin if it gets the adoption in a liquidity push in the later stage of a bull run. The later stage of a bull run is like the last 365 days out of a 4-year cycle. Okay. So with this being said, this is a huge push, right? A lot of money being made, but you have these down draws. These are like the, hey, this must be over moments. You had 2 of them. So for example, when you talk about the narrative, hey, this is all a fluke, this must be over. That happens in a bull run where you have these consolidation, really more so like capitulation-esque type moves back down, where yes, you have an asset, for example, that can go up. So we'll take the average price here. So you have an asset that can go up about 7x, but from that strong push in a small amount of time, then it can come back down. What does it come back down? 80%. So that does happen in crypto in a bull run. And the key is being able to weather that storm. So you have a bull run for Solana. This is a lot of TradFi money. This is venture capital money that have socked into this stuff, or this coin in particular. Those guys at FTX, they're really, really trying to push the envelope with the marketing, but not just that, their own holdings, right? But Solana was not FTX. And so the key thing is understanding that even though someone or a large entity holds something, it doesn't make them and it may seem like, oh man, because FTX, they were huge advocates, like putting Solana everywhere, right? In terms of the verbiage and the marketing. But the key is this: 2 separate entities, 2 separate concepts. FTX goes down, Solana stays alive. A bear market, what does that look like? So after something goes up, basically 410 times the money. So let's write that out. So 410x, which is nice. So after something does that, let's make that a little bit bigger. Yes, it's going to have a bear market. And so the bear market, and typically in crypto terms, are 365 days, maybe a little bit more, maybe a little bit less, give it a 2-month buffer, more or less. With that being said, and these are just the trends that I'm giving you guys. Now, with that being said, yes, you're going to have a bear market. And so that bear market can be quite a bit of time. So for this instance, if we look from top to the exact bottom, we're talking about something that goes down 97%. Yes, that is very painful for people that only want to invest at this top basin. Like, they miss all this other stuff because they're late to the party. And that's very painful for people who only invested in this portion of time here, which really was, I mean, we're talking from September 2021 to January 2022. So Q4 of 2021 going into 2022. So we're talking about people that missed. We're talking 3 years and 3 quarters. They missed all that and they only got excited about investing in crypto up here. These are the only people that have the tumultuous stories about how they hate crypto because their $10,000 turns into whatever, 100. So here's the thing. So 101 charting, you mitigate risk when you invest in bear markets. 101. We can identify bear markets even from this chart very easily, which we'll talk about. We're going to talk about a series of things to go through in your mind before you even invest into something just by looking at this chart. So we've seen a bull run, we've seen a bear market. So that gives this coin somewhat of a price history. The longer that a coin does something, or longer that an asset has a trend, the more chance it's going to continue on with that trend in the future. That's called the Lindy effect. So with that being said, now as we look at this, the bear market comes. Did we talk about the length? So let's talk about the length of this bear market. 426 days. So that's more than a year. A year and what, 3 months, 4 months? So yes, that's a long time. But then you have this very boring time period where we hit the low, which was just about $7, $8, and then we go sideways. So this was, a beautiful time. We're here in the VOC Crypto. We talked and we mentioned about Solana. Everybody's going to hate it after a bear market, but everybody hates everything after a bear market. And so this boring sideways chop after a bear market is a big, huge thumbs up for an asset that has some type of use case. Now, all the things going on DeFi and Solana, a lot of people were like, they didn't know that was coming along the pike, but nonetheless, understand, when there's a certain amount of network effect that something has, which Solana gained that in its first cycle, it's going to make it very hard for us to just completely just go away. I knew that. And so, us in the VOC Crypto, we talked about Solana all through this time in 2023. And, once again, we're talking about it here at this base here. But let's get some context to what has happened in this bullish move that we've had so far. So this period of time that we're in. Okay. So from January 2023 to where we are currently, this is an asset at its best that has gone up just about 23x. So let's actually kind of get that in our memory bank. So these are things like when y'all are charting, you want to do these things. You want to get these understandings. You want to say, okay, what has happened? Where have we come from? Where are we going? Right? So 23x at its best. Currently, though, from the top, we have, come down a little bit, but not anything crazy. So, and it's crazy because there's a difference between just this price action between here and here. So here and here, right? Where you go from 23x just down to 15x. Lets you know that when you are investing in bottom basins, it gives you an opportunity just to eke out another 5x or 10x versus somebody who wants to buy at a local top in the long term. So this is where we are now. Is it 410x? No. It's 23x at its best. But with that being said, let's take a look. So there's a tool that you guys can use called the ghost bars or the bars pattern. So bars pattern right here, what you can do, because you want to look at size of the move, right? So for example, size of the move. So let's kind of make sure we can mesh that up to where it fits. You can look at the size of the move. Now, typically in a cycle 2, movement, it's never going to be the exact same. It's hardly ever going to be that, right? But duration is something to think about, right? So if we want to place this here, what can we see? The orientation is already changed. Now, mind you, now when did this come out? It didn't even get a full cycle. So from May of 2020 to this point here, November 2021, that's not even a full cycle coming off the low, because Bitcoin low was in 2018. So it's missing, it came out at the later stage of the last market. So one is this. We can't just like copy this and paste it over here and be like, oh, well, this is the same length, so it's done. No, understand that this is going to play out a full cycle where this was only a half of a cycle. Now, if you want to try to put two and two together, maybe you say, okay, well, hey, let me put this other half over here. Now, that would be asinine to do, because once again, this is cycle one. You can never, just copy and paste cycle to the next cycle. It's not going to be the same. But the key thing is this, is one thing that you can see is in comparison, right, is structure and movement. Because people like to treat assets similar. Now, I'm going to draw a comparison for you guys that maybe you haven't thought about. But in the down draws, do you notice that there is certain behavior that this asset is getting in both the scenarios? So this cycle here, so right here, and then also here. So let me make it make sense. Now, what we're seeing is this is a little bit more elongated. So for example, let's see if we could pinpoint what I'm talking about here. So this is a more elongated version of this. It's just stretched out. Where, for example, let's see if we can get our arrows to help us out. You have a local low. Then you have something a little bit lower. Right? You have liquidity push, and then we take off. Right? So once again, local low has something a little bit lower. Liquidity push, we take off. Now, mind you, we had one more extension here sideways, and then we take off. But the key is that the takeoff looks very similar, because you have uninterrupted price volatility to the upside for quite some time. You come to a little bit of a peak, you consolidate. So came to a little bit of a peak, consolidated. We push again. And then let's talk about this here, right? So this consolidation, if you notice, it did a good job of holding a certain region. I don't know if y'all can kind of see that, but this region held pretty good, but besides some wicks. It's doing the same thing. It's holding a region very well, besides a few wicks here. So charting is looking at patterns in price movement, not only just, hey, let me throw this trend line on here and this moving average X, Y, and Z. So looking at those similarities. Now, if we want to just look at more recent time, prices at $139. If we kind of, just look at a over and under in this region here, because it's having some support from this local high here back in 2023. But if we just look at like a over and under, something extremely simple. So we just take the top end of price, we take the bottom end. So basically anything below the red dotted line is the under, anything above it is the over. So let's type it out. So these are all ways to see how do you stack up versus this latest cluster of price action. If you were looking to say buy this, whatever, today, this week, this month, whatever the case is, these are things to use in your toolkit as you experience price movement to remember, okay, hey, am I over or under? Simple stuff. So let's go ahead and write over, and then here we can go ahead and write we're under. So under. Compared to all the people who have invested in this asset from February of 2024, where do you stack up? Now, there's going to be a small subset of people that are always going to be over. And you don't want to be a part of those people because they feel the most pain. And then, we have a batch that, is under the halfway point. So what we need to also now do is look at, okay, where did the most volume happen on this chart for this asset? So now we can come with a fixed volume. So here's the thing, fixed range volume profile. You take it from the moment that price goes into your base, you drag it over. Now it's going to tell us a story. This gives us a little bit more detail. So here, let me explain what this is. This is going to give us the volume basically on the buy side and the sell side. The yellow is going to be the sell side. The blue is going to be the buy side. We really want to pinpoint on the blue. When did the most people buy this asset in this price range? And we have that's called the point of control. So the point of control is currently, I'll do a price point, is at $149. So that lets you know that you're below the halfway point of the sideways consolidation, which is the red line. And we're also even below the point of control where the most volume was for this asset in the range. So 2 check marks that help you say, okay, cool. The odds of me having a more favorable outcome is higher versus if I wanted to do something towards the top of this range. So what are we doing? We're doing something called deductive reasoning. Saying, hey, what are all the things that I don't want that are not favorable? That way I can get to the situation that is. Sometimes you have to wait for it. Sometimes you have to press that button right when you see it because now's the time. So, but once again, like the reason why we're going in so deep is because it allows us to flex these muscles in our brain to say, okay, cool. Instead of us doing push-ups, let me actually hit some squats too. Let me actually go ahead and hit some cardio. Let me actually let's go ahead and mix it on up so we can actually create a real foundation in our understanding. And when you're a little bit more strategic, it gives you just a little bit better outcome, right? Sometimes a lot of bit better outcome, truthfully. So because we're going to know how to operate. Now, this is one way, like I said, I haven't pulled up any indicators, nothing. This is just simply just charting, okay? Now, with that being said, this is a good thing to see that we are below this range. So we've been able to hold support multiple times. So not just once, not just twice, 1, 2, 3, 4, 5 times. The more something happens, the more likely that it's going to maintain and stay the same. If we're going to keep making support here, that's a very strong thing to see. Especially when you compare this asset to other assets that they kept making lower lows. So rigidity of an asset is very important on the downside, especially when you're looking to be in it for a long time. Not just only, okay, what goes up, what can give me the 50x, 100x. It's not just about that. Making sound investment decisions based upon what you actually can see and extrapolate from the chart is very helpful. So, and I'm going to get to some questions here in a bit, y'all. I'm just trying to really, really get through some of this base foundation. Now, and I put them on the channel so many times. 2 of the easiest indicators to use, if you do have to use 2, is going to be the RSI and the MACD. So let's pull those up. So we'll get rid of the VOC crypto stuff for the moment. We may get to that in another stream, or I might pull up towards the end of the stream. So we see, okay, where over and under is. So one of the first steps, am I over or am I under compared to everybody else? Right now, we would be under if we were a buyer today. Let's look at the MACD. So let's pull that up. Boom. And we will also pull up the RSI. I've explained both of these several times, but I'll do it one last time briefly. So over, under. These 2 generally tell us momentum and strength of a move. As you can see, they both have moving averages. So here in blue and orange for the MACD, and then here in purple for the RSI, and yellow. What we're looking for is confluence. So confluence is the aspect of 2 things telling us the same thing at the same time. But then also what are we looking for is what type of routine things can we see that tend to happen in these ranges of going sideways? So in general, one easy way to say, okay, let me start to look at an asset when it starts to become undervalued on a daily standpoint. So we're looking at the daily chart. So pop on the daily chart. Is anytime that you get very low to this dotted line, the range for the RSI is going to be in between 30 and 70. When you find that it comes down, and we're talking about in a bull run, it comes down to 30 or anything close to it, like really you can say, okay, I'm cool with anything less than 40. So whatever, put that there at 40. These are times that you want to be looking at that asset. And so what we can see, we can extrapolate is that in recent months, so we're talking about from April on till now. So we got April, May, June, and July is, almost halfway through. So 3.5 months. We've had some opportunities below 40 to look at. So key thing is not buy the asset, look at the asset and start to look for some type of message that the chart is showing. So, for example, we can see that we have this area here, April 12th through the 16th. Once again, a lot of time, this is never just one day. You're going to have a window of 3 days, a week, whatever. So 1, 2, this time here in June, late June, not too long ago. And this, time here that we're just coming off of on the 4th of July was not too long ago. So 4 times. Now, what I like to do is draw a vertical line. So let's draw a vertical line. Boom. Let's draw a vertical line. Boom. Let's draw a vertical line from that point. Boom. Let's draw a vertical line. Boom. Now, what we also need to do is choose a time period that's not just so recent. Let's even choose a time period from last cycle where we see maybe a similar opportunity, whatever the case may be, right? Like, I don't know, maybe it's this time here where it goes under 40. It's clearly in a bull market. It has a retracement down on a daily basis. And then so let's put our horizontal ray at 40. So boom. And then this also kind of can give us some time periods where, okay, yeah, it did get below that 40 a couple times. 1, 2, 3, and 4. Okay. So once again, using these basic understandings. So 4 data points from 2020, which is, about 4 years ago. Okay. Now let's pull the chart back up. What can we learn? What can we see? So one thing is key. Does this call the exact bottom of an asset? Not always. But what does it do? It gets you in that lower price range, the lower risk range. So let's really just focus on so right there, you were able to get an asset that was in the midst of the bull run. So it went up 7x like we talked about. It had that long duration from September 2021 to November, a couple months of what's going on, right? But then you still have opportunities to say, okay, maybe I get a DCA at $2, a DCA at, $1.50, a DCA at $1.60, and then another DCA at $1.40, right? 4 opportunities where, yeah, you might have did your first DCA there and it goes down, 43%, 42%. You're like, what the heck? The key is this: as an investor, understanding what type of regime are we in? Are we in a pullback in the midst of a bull run? The answer is yes then, and the answer is yes now. And we're even more sideways than anything. We're more similar to here last cycle, as far as the way that the price is moving. Before another liquidity pushes come in bull runs. No one can tell you exactly the day. And I'm not going to profess to say, hey, that I'm going to tell you the exact day or what time of the year or Q4 or blah, blah, blah. No, we're not even going to talk about that. Just know that more money creation is going to happen, whether you like it or not. So with that understanding, Solana is a valuable network that people will partake in, not just today, but even a year, 2, 3 years from now. So now we could see just like how this happens, where we get the bottom basin, and the key is, really taking advantage of the data that we are able to use. We have 4 points. We're at the boom. 1, 2, 3, 4. The bottom basin of this consolidation. So these are really good DCAs, right? Now the key is this. All right, what if we break down? Oh man, what if we go down back to $80 or what? Okay, cool. That's fine. Let's talk about what if that happens. So what if we go ahead and break out of this range, which happens? Like Bitcoin broke out of its little range. There's things that break out of its range. It's perfectly fine because time is what heals all. But then what you do is you just look, okay, cool. You have to shift and adjust your strategy. You move a little bit slower, for example, if the range is broken. So if the range is broken where we just start to trickle down, whatever, and then it's like, all right, boom, we break this, and then now we're down here. Now how do we look at this and we are like, okay, like what do we do? Like, do we just keep buying the falling knife? I'm not so much in that regime because, extended bear markets or extended bearish times do happen more than what you think, more than just a quarter, more than just even, it can be 6 months and you're like, dang, 2019, that's what we experienced. Where it was just like 6 whole months of like, oh, this is definitely over. But no, then we came back up and we made new highs after that. So it can be a long time. Like this consolidation range, for example, has only been 130 days. We're talking, 4 months. So, and really when I just talk about coming from the high, it's been 12 days. So less than 4 months. So we could see another 2 months of whatever. In that time period, you got to ask yourself, okay, what are you prepared to do and not do? So every time that we dip lower, is that like, hey, throw your kitchen sink at it? No, but devise a plan that you're comfortable with. Say, hey, maybe I have left in this bull run for this asset, like over the next 6 months, only like $2,000 that I'm willing to put in. You create your windows of where you see that it may be fit to do that. So before 2025, let's call it, for example. So let's say, now this is what you do as an investor. You have to pre-plan your capital investment. Too many people don't pre-plan. And that's why I just like, I love to talk about this in this way because it helps you in every scenario. It helps you have prudence from doing too much. It helps you have some skin in the game if you want skin in the game. But you're not just doing it off of emotion, off of a whim. You're going to have this already set by the dynamics of what the chart's doing and what it's telling you before it even happens later on. So if we break down, then you say, okay, what are some likely points that we could potentially get close to? And so once again, what we need to do is say, okay, now there's a lot of buying activity here in this range and this range. So potentially we could see price come into 2 pockets in the rest of 2024 on the downside. Let's say, and you're like, hey, I don't want to be chasing every little, drop down $10, then buy more, then buy more, then buy more, then all your dry powder is gone. Do it to where you see the largest liquidity batches. And if you don't hit it, then great. If it doesn't hit it, then great. Because, for example, you've got, a DCA here, for example, where this is a safe DCA because we're on the underside of the basin here up top. But if we go lower, right, you just give yourself like 2 shots. Like, hey, I'm going to throw a shot here. I'm going to throw a shot here. You decide that. You're the investor in charge, right? You don't need anybody to sit and tell you, oh, it's going to go up. It's going to go up. Right here's the low. Right here's the low. Like, nah, like don't get into the narrative. You decide what you got to do and what you need to do, what you feel comfortable doing. Maybe you say, hey, I'm not going to do anything and just let it come down to wherever it may come down and it may go back up. But just live with that. Don't be like, oh, man, I should have put all my money at that low point after the fact. You're just going to do yourself a disservice. So with that being said, you may say, hey, I'm willing to put whatever your reasonable dollar amount for just one particular asset may be. For example, what we'll write is, I don't know, whatever, somewhere up in here. So 1K DCA. And then you say, I'm willing to do maybe another 1K DCA if we hit, somewhere in this range. And it doesn't have to be at the very bottom of the range. It could be just wherever you feel it. You might feel you want to do it just a little bit before it drops down to $70. If it does, you might want to do it just maybe right at $120 if it does, or you wait till $103. It's up to you. But the key is having the plan and preparation beforehand versus trying to be like, all right, let me invest $500 every fluctuation. Boom, boom, boom. Before you know it, you've invested $3-4 grand, at $100 through the next, couple weeks. And then we potentially just duration of this. So it could go for another month to come down to whatever, 65. I don't know. Y'all see the thumbnail, Mt. Gox, they might just keep dumping Bitcoin and we might just be chilling down for a minute. Who knows? Or we just do something a little bit more probable where should we hold some support. And this would be a good time to DCA at the lower basin in the underside. And then we at some point break out, past this local high. That is very much in the cards too. But the key is, if you're going to do that, just make sure you do it, preferably below $149 and then also below $162. And then let your cutoff, let your cutoff be there. Don't ever buy an asset when it's close to its all-time high. Just make that rule for yourself. We can use the chart to do that. Okay. So there's a lot of stuff I just gave you guys. MACD. We can do the same thing. When the moving averages are below the midline, we need to start looking at the asset. And when you start to see the red candles compiling together, the larger, so the lower they are, I guess you can say, from the midline, that means this is a pretty bearish move to the downside. How you see this may turn around is if we start to see green candles on the upside, but then also the moving averages go past the midline again. So I've talked about the MACD several times on the channel. So this is opportunity zone. If we continue the bullish trend, if we break it, then we have to discuss and reestablish some rules to the downside of how you would want to play it. So there's that. All right. That was a lot of info. Let's see if we have any comments. What's up, you guys? Let's go. Okay. Let's go. Yes, we are back. Thank y'all for coming through and supporting for real. And yeah, we'll talk about that here in a second because they just filed their S1s, Van Eck, BlackRock, and all those guys for the Ethereum ETF. So that's coming probably within the next few weeks. Yeah, nah, I didn't give no notification for this one. I just popped on. I was like, what time is it? Let's go. Let's just get it. Let's go. So we're in here with a dude large and in charge. What's good? Let's see. Daniel Day, you give some of the best game on this app when it comes to crypto. I appreciate that, man. I'm just putting in the deposits of what I've learned, what has helped me. And I just hope that, it's valuable to you guys, right? Like, you guys got to extract some type of value from somewhere. I just want to be a person that adds value. And yeah, and yes, we're talking about over and under and momentum today. Over and under and momentum. So this is barely touching the surface. It does get deeper. But as you can see, this is like more than what 99% of people who ever invest in crypto will ever do. So you literally got people beat simply if you can just, watch one of these streams. Or I plan on maybe doing a total of 10. So, they're going to keep coming at you in terms of just really being chart masters and how to really help you guys on the understanding of technical analysis. What else we got? Ha 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 ha. Heard you went back to cutting hair full time. Nah, man. No, I got a business to run, but nah, not full time. Not full time. Oh, okay, yeah. Head back to the beginning, and when you get here, you'll see a shout out, David T. Once again, putting in those deposits and learning what's necessary or helpful for you. Yes, sir. Go ahead and buy that bag of Jupiter. Okay, yeah, Jupiter is a derivative from Solana, obviously, the basics of what we're talking about. So do what you feel is necessary. I commend that. Here we go. Let's go. Haha. Yes. With that being said, this chart map, because here's the thing. So it may be a lot too much for a newbie. The goal is to not be a newbie for too long, right? Like I've always took any challenge and said, I'm not going to be the most green person here no more. Like I'm going to really put in the time. If I've got to watch the stream 2-3 times or do whatever it is 2 or 3 times or go study, whatever it is, only you can control that. And you can't become a master of anything if you're not willing to put in the hours of time. So when it comes to investing, you can't say anybody masters investing, but you can become a more prudent, a more strategic, a more skilled investor for sure. The only way that you can develop a skill and implement it is by hitting the mental gym on these charts. We've done a lot of on-chain data, sentiment analysis. This is the only way. So this is the only way, my friend. And Henry R., I know you are putting in that time because you've been here for a minute, and I appreciate that. That means we in this together. So just tell me when moon, in the future. Cool. All right. So we've talked about momentum. We've talked about overvaluation, undervaluation for a particular asset. Now, what's helpful is universal moving averages. Okay. So universal moving averages, meaning what moving averages do a lot of investors look at? And we're going to look at the 100-day and the 200-day moving average and see, okay, where does that have us currently? So let's look at moving average simple. Boom. Let's get both of those. All right. So let's pop that on. Let's put this on 200. Okay, let's change the color because I don't like that blue. It's kind of tacky. So yellow, and thicken up the line. And then let's look at the 100. So let's do this one orange. Boom, 100. All right. Yeah, y'all go into y'all settings and change the stuff up. I don't think there's too many streamers out here that really like, hey, this is how you actually go into the settings and make things on your chart, or like how to use all this stuff. I try to do it as much as possible. But anyways, so that's how you change the moving average on your chart. And the color, if you want thicker lines, whatever. In orange is the 100-day. In yellow is the 200-day. Okay. In general, when you have both of these moving averages in an upward trajectory, so you can literally like put them at a straight arrow going up. If there's anything that's going up more than it's going sideways, that's also telling you you're in a bull run for these two moving averages. Like even if you see the angle in the direction, for example, that's bullish bull move right here. Now, if you kind of see, like it's like a little, just imagine it's like a little thing going down a stream or up a stream. It's wanting to kind of turn a little bit. So the key is this: how do you know that the regime change may be more bearish than bullish? Okay, so write this down for you new people. If we have the 100-day eclipse the 200-day and go below it, that's letting you know the faster moving average is now below the slower moving average. This is typically going to be a sign of a turnaround that's not going to be something short. It's going to be a little bit more elongated. So for example, we go back to this cycle where you have, and it's hard because we didn't have that much data for these moving averages, but for example, you have the 100-day in orange above the 200, so that's bullish territory. Boom. Now price is already coming down. The moment that you see, okay, this 100 is now below this 200, that's letting you know, all right, we may have an elongated period of time And here's the context of, and it spent this long. It spent more than a year being above it, you know? Now, sometimes there's some back and forth like that. But the key is this back and forth is after a long time where it was below it. So this is a clear bear run. So for example, like if you didn't know that this is a bear run at this point, then, you had your head under a rock if you're looking at Solana. If not, then, this is what a bear run looks like, the duration of time. And then you see now how these two moving averages start to interact with each other. This is letting you know, all right, what's going on here? Like, it doesn't know if it wants to continue to be bearish or bullish. This indecision is always a good time to say, all right, cool. Like, let me actually start, looking at Solana, what's going on in the ecosystem. Like, these two are just kind of going back and forth, straddling. This is all good eating right here, right? The low was in January, sideways consolidation. That's all good stuff. We'll put this on the weekly chart. And I'm going to show you something, okay? This RSI. So last little tip for the day, and I'm going to leave y'all with this. So last little tip. This weekly RSI is really, really good, especially on the bear market side, of letting you know when you finally hit that extreme undervaluation for an asset. So how I knew, all right, this bear market is dang near almost over, or this thing is so depressed that it's time to really get some really good deep value buys. Once again, use 40 as your barometer, but anything under 40 like is really good eating. So the window, May of 2022, January, like that window was pretty good, right? But even also, which is good as anything, because there's also a midline here, if y'all notice. So use the midline. Anything below the midline off of the low, especially. So once you do the round trip, so the round trip is going from a moving average that gets above the 70 marker, and then a moving average that gets to the bottom, the 30 marker. So round trip from point A to point B, round trip. And you hit the low. Anything below the midline in between that time is good eating. So, that other window. So 2 windows that we had. This is like hey, you're a little bit more on like the catching the falling knife, but yet you're still getting good value through, like I said, through time. And this is like, okay, like this is like you're more confident buying. Okay, like, yeah, I can see that low is visually in, especially as this continues to play out. I say participate on both sides because nobody knows when the low actually is, if that makes sense. Now, you don't know if it's going to hit this 30. So why not do some here under the midline, also do some here under the halfway point, just to make sure. And yeah, we got it, but it doesn't always happen that way. So what we've done here, we've come back to the midline at 50. On the weekly chart, we've regressed down. What we want to look for is some type of hold, because if you can see, so let's kind of get this stuff out the way, and I'll finish with this. In its bullish moves, it may deviate below it just slightly, so a few points, five points give or take, or 6, but it stays somewhere here and it uses that support here. Let's see, it breaks above it, uses that support here. Let's see if we get some type of support here. If we get support, once again, that lets you know, hey, we're in a bullish trend and this is the time to DCA. Once again, off of what we talked about, the price is potentially going lower. We'll probably find ourselves in this band here, but you slow play it. No need to throw it all in at once because it can be more elongated than what you think. So I hope that helps. This is Solana. What is it? No, the number 3 cryptocurrency. Or in market cap. Let's see. So, or 5, one of those two. Trying to, I guess, exclude the stablecoins. BNB just pop back above it. So it's number 4 coin in market cap, has probably one of the fastest growing networks in its second cycle. This one is in its third cycle. This one's in its fifth cycle, I believe, something like that. So inertia is on the side of Solana in terms of percentage gains. But yeah, so that's Chartmaster, episode 1. Alongside looking at charts, consistently gaze over the movements in price for, these coins. And if you're like not sure about like, oh man, what coins to focus on, hey, I would just say don't even worry about all 100 on the first page. Look at the top 10. So maybe you're looking at Bitcoin, Ethereum, BNB, Solana, whatever, XRP, Toncoin, and Doge. I'm going to do you a favor. X out XRP. Don't even worry about it. So Ton, Doge, staked ETH is basically ETH, Solana, BNB, Ethereum, Bitcoin. Start your practice by just charting these coins here. So how many is that? 1, 2, 3, 4, 5, 6. 6 coins is a great way to start. So I hope, once again, that you guys got some value from this. I'm going to be actually migrating to Patreon for those that want to get access to the Vaults of Crypto stuff. So the indicators that we have, these invite-only scripts are highly useful, which I've gone through many of them. But we had the 52-week low-high alt season indicator, really good stuff. Asset risk indicator, fear and greed, global net liquidity on the 90-day oscillator. The halving profit window is my favorite. No, it's my second favorite. The Heikin-Ashi trend reversal was the first one that I made. This is actually my favorite. The moving average web. So a lot of good stuff. For example, if we want to pop that on, another supplemental thing that you can do is add good indicators to your skill set. So for example, these indicators also, like I did all that stuff manually with my own thought process, but it also just supplement that with like, hey, here's a buy diamond. 1, 2, 3, 4, 5. 5 buy diamonds for Solana in between the price of like $32 and as low as $9. So use things that are supplemental. That's always helpful. Y'all can go ahead. There's a paywall behind it, but once again, there's value if you do see it. It's there for you to go ahead and get access to. I'm going to basically give the info to the Patreon in the next live stream, which I'm going to be doing tomorrow. So tomorrow night, I'll be doing that live stream. I introduce some of the information for the new Patreon. If y'all want to come be a part of Vaults of Crypto, we've got some folks in there already. I'd highly suggest it to step your game up with us in there. So with that being said, I hope you guys enjoy the rest of y'all's night. Let me check some of the chat before we take off. I think we're good on the chat. Yeah, we're good on the chat. And yeah, y'all be easy. I will catch you guys on the next stream. All right, peace.